TSmart202. This is Solomon. If today is your first time coming here, my day trade. My style of trading is very different from many people, and that is what you want to have. Is you want to become successful in trading because you want to reach a point where you are not following people blindly, but at least you also need to learn from others. I have very few things on my chart, and also I look at very few specific things before trading. The stocks that I'm looking for was an IPO that happened yesterday, and by the close of the day, it had went to 30 plus, and then it dropped during pre-market. The pre-market high was 57. So now we were looking at it to break the high, pre-market high during the trading hours, and it just broke that high. So as you look at it now, it has a new high, and who knows where it's gonna go. So we just have to keep watching, and anytime that it come back to break the new high, then we will have multiple highs. So but you will not want to put all your money in one basket, and this stock is highly extended. So if you did not get in when the move was happening, I will stay away and watch it. There's a lot of stocks that are gonna um come along, but and on top of it, you have to see that is this price range that you want to trade. If it is not, then that's another thing that will also make you want to stay around and then look at it. But I'm always happy when I'm watching stocks that are moving high, because every day I have my book that I'm going to write the stocks down and look at it and look at the properties, like what was the float, what was the news, how did the stock move the next day, how did it move when it broke the new high, and then you can even write a note and keep it there on the chart too, so that next time if you have similar stock, then you're over there paying attention to it. But as it stands now, the new high was, I think, 65. So a break of 65 is we will have another new high. news, and also um, the float is below 3 million. So it was nice stop when it hit the scanners, but it kept breaking one. Initially went to 120 and then went down again. So um, one of my focus is if the news has to be fresh, and which this one proved that it was a fresh news. So I got some around $1, and because the market had no open, I put a sell order at 120, and then afterwards it ripped all the way to 170, dropped to below dollar. So now um, the next move will have to come and break the high of the day. Other than that, over here is just consolidating. So, but it's still because it put up that impressive move during the pre-market. I'll still keep it on my watch and see how it goes before the day ends. It has a final approval of a cancer therapy patent in Japan. So it has a news. What I'm looking for every day is the stock have to have a fresh news. Does that mean that it will always go up? No, it doesn't always go up even with news. But there are certain indicators you want to have so that if the stock is going up now, you feel comfortable because it can get halted pending news. And if you don't know why the stock is going up, you don't want to get caught in a method of um, investigation. So at least you get to know why the stock is going up, and then that way you can get yourself in. But as it stands now, if it's come back to break $1.70, then I hope you hear me now, Eric. Thank you anyway. SWMR is still you have a lot of people watching, and it started from $11 as of yesterday. So, but if you didn't get in start with it as it stands now, it's way extended. So what I would do, pay attention to it after market has closed. I'm going to look at the stock and see what is it that it has that made it move this quicker. If you wake up and every day you pick up the best stocks and watch them, pay attention to them, you at some point you're going to find out that the stocks that move so quick has certain things in common, and those similarities is something that you want to have, and also have patience, because stock that worth $60 is how much do you have in your accounts if you are just beginning a beginner trader. So I'll rather focus. My best price is always between $1 and $3, and I'll focus on it. But I love these actions because it brings momentum into the market. I really like the best time frame that I normally use is the 1 hour time frame, and the reason is simple. It just separates the noise clearly for me, and also the candlesticks that I use all the time is I like this high connection because it also separates the noise. If I put it back to the normal candlesticks, you see how many red and green and stuff you see. So, and especially when it's like 5 minutes, you have multiple red here and there. Yeah, but if I change it, it's just clean for me. So that's why I prefer those this style. But then also I prefer, even though 1 hour is long, if you think about it, when you go to work, you're gonna either work 8 hours or 12 hours. So if trading is something that you want to focus on, you need to have patience and you need to have time for it. So even if it is an hour, I want to see the action, and clearly you will see that anytime there's a break of the previous red candle, you will see that it tends to go up. So I'll rather keep the hour on versus 1 minute, 5 minutes and stuff. I can use it to see how the stock is trending, but I prefer the 1 hour time frame. Most people like to focus on the level two and also the tape and stuff, and I really don't focus on it. I mean, most successful traders use it, but like I said, you're also trying to develop what fits for you. There are so many sellers or buyers that you cannot see on the level two. So my thinking is, what's the point of me wasting my time studying it every single time? Yes, you can ask question, Eric. You can ask any question. So the only reason I don't really focus on the level two is if I cannot see some of the buyers or the sellers, the hidden sellers or hidden buyers, then there's no point me sitting here studying it all the time. And if the stock will move, it will move. It depends on certain things before the market open. For instance, it's just a pure demand and supply. That is why we look at the float. So if the float is small, when you have smaller shares, it's easy for more money to come in and then more money to chase it for it to go up. That's one of the things. Also, if you have a news that is really, really genuine, everybody is looking at it. So it's on multiple scanners. So some of those things I'll pay attention to it. And then with the introduction of AI, now what happened is, instead of me going to spend more time on what the news is, I can program the AI to sift the news and tell me whether this news is a hype or is a real. And that is all I need to know. If it is real news, that's all I need to know to make my decisions. So, Eric, if you look, I I pay attention to the price itself. Um, you can have the time and sale, which will show you uh, how much price is going or coming in and going out. But at the same time, if you look at SWMR, the price is here. So I'm watching it from here. If you look at the top gainers that are here, the price is here. And with this price, you can nobody can manipulate it. Nobody can manipulate it. That is why I prefer looking at it. So if I want to add anything on here, it will be the time and sale, because that will just show you how much is being bought and how much is being sold. But again, I want to keep this very clean, not too many stuff on here, because I can watch this price everywhere. So um I'm not saying that the time and sale or the level two is not important. It is important. But my point is, if I cannot see everything, if somebody can put an order here and take it back, or they can put a fraction of the orders on there. So if you use that alone to base on your trading, you always gonna make a mistake. But without it too, the stock always moves. So what are some of the things that make the stock move without even you spending more time on the level two or on the time and sale? I mean, if you are advanced trader, you understand where you can see the price, so you don't care. But if you're beginning, um, I would suggest you keep the time and sale, because this one is just comprised of buying and selling. So this will show you the price clearly. And then on top of it, if you look at the top gainers, when the price are changing, you will see it also here. And then with the percentage change also, you will see. And also, I always build 3 to 5 watch lists every single day, and then I'll go in and every morning I'll take it out, change it, and see what the market has again. Okay, so there are certain levels in trading that are so much respected by traders, and we call it psychological prices or psychological levels. For instance, a whole number is a psychological number. So if you pay attention to any stock, when it breaks a whole number, in a split seconds, you see how quick it moves from there. As you trading, you're going to understand that there are buyers above the whole number waiting to buy, but they don't want to buy below the whole number because it's always hard to break it. So it's a psychological number. Also, the high of the day is also a psychological number. So before the market open, we have the pre-market. So the pre-market is going to trade when the market has no open. People trade earlier before. Now, the high of that pre-market it becomes a resistance, because when the market open, if the stock is able to come back and break that high, now we're going to get new highs. So this were some of the for instance, with SWMR, as of yesterday, before the market opened, it went up a little bit and then it went to $30. So $30 market close, it dropped down. After hours market, it went all the way, I think like 37. That has become a new resistance. So what is resistant today or right now can become a support after it broke it. So yesterday's pre-market, if the stock break it during the market, now it's no more a resistance. Now it can become a support. So this red line used to be a resistance. Now it's no more a resistance. So I won't even use a red line. I will use green to signify support. Now, what is indicating over here is if this stock drop all the way here, I can buy because it has multiple supports here. You don't see it, but you see that when it dropped, it bounce of it and then it go up. It bounce of it and it goes up. So it means there's a support right here. So if I'm trying to buy it on the low side, I'll buy it when it comes to this support side and then put my stop loss down here. Now we already have a new high, which is I would say 64. That is a resistance too. So it's so hard for it to go back and break the 64. But if you break the 64, you will see how quick it will just rip through. So you always want to pay attention to the high of the day, the high of the previous days. All those things are resistance. We're gonna talk about resistance. It can be a whole number, a half dollar, and you will see it when the stock is approaching, and when it break, how quick it just rip through. It's kind of like invisible, but as you trade along, you're going to understand that there's buyers above here or there's sellers below here, because once it gets here, most people that are trading understand that once it get here, now it's weak, it's going down. So if they have anything, they're gonna let it go. But if you come here, for instance, if you break 64, you will see how quick it will just move from 64 to 70 or 75, 78 in a split second, because there are buyers that are waiting. It can consolidate, it can move up down inside this arena. But then once you break this, there's nothing to pay attention to. It can move as much as it wants. So that is why I put these lines over here. And this is just top gainers scanner because I trade long. I don't do short, I don't do options, nothing. So I always prefer the top gainer scan. And I don't do nothing fancy because if the stock is going up in the market, all the platforms will show. Even Weibo has a very nice interface that is even easier for beginner traders. Also, this is a bit complicated, but it's faster. But I don't do anything fancy. I'm trying to do like things in a very easy way so that when you wake up in the morning and you're going to trade, you're not going to sit down and then it's complicated for you. Because if the stock is moving up 100%, 200, 300, definitely it is something that is moving the stock. So even if you don't know that something is moving, you know that the stock is a part of the top gainers, and these are the stock that everybody is watching in the whole of the stock market. So I always prefer to look up to 5 and then see. But like I said, I have a price range, and as time goes on, if you are trading, you're going to see which price range fits you and then which style. But always you're going to pay attention to the whole numbers and also the high of the day. So any stock that you pick, just mark the high. What is the high? And look how quick the stock will move if it come back to break that high. I have a PERF. The high of the day. The high of the day is around $1.74. I got in when it was high. So now if I will buy again, I will have to wait until it come back to break this high, because now once it break here, people are just ready to, buyers are ready to jump in. As it stands now, it doesn't really show any sign of interest for buyers because there are other stocks that are moving. So you want to pay attention to like the high of the day is one of the stuff that you want to pay attention to. You want to pay attention to news, because you always want to ask yourself, why is this stock moving? Like, what is moving it? Before a stock will move, there should be a reason for that stock to move. And also, you have to look at the price. Where is it trading now? What's the price? Is the price today big, getting closer than the high of the day? Is it above the previous day high? And then you pay attention to the volume. Most of the charts, you can even put the volume indicators down here, because if you look at it, when it's dropping, you see that the volume bar here is also red, so you pay attention to the volume. And the float, how much shares does this company have? Because the more shares they have, it's hard for it to move like quick. And what we are doing now is we are day trading. We are trading just for today, so it's not like investment. That is different. So you want to pay attention to the shares that the company has, and also the market capital. Does it make sense? Because sometimes you see a company, they own market capital is like 5 million, and then this company is talking about 4 billion contract and stuff. If you pay attention to it and compare well, maybe it's just a hype or just to get people in, because for the most part, for a company that is 5 million in market capital to get 4 billion contracts, it doesn't sound well. And then the pre-market high and the key levels, those are the breakout areas. Like I told you, if SWMR was able to go back and break $64, you will see how quick it will just move. But it hasn't. So 1 is a whole number, and most traders pay attention to very much. So I'm keeping CGTL on here on my watch list for us to watch and see. It's 96 cents. If you break 1, which is a whole number, you will see how quick it goes to 110, 115, and then 120. So for the most part, traders understand that I can get in at 1 and sell at 115 or 120 in a split seconds. It's easy for you to get that one than to look for 40 or 20 cents in that move. But when the stock is getting closer to 1, you should pay attention to it. Because this gray shaded area here is when the market has not opened, the pre-market. So this high is what we want it to break. right. I'm gonna use CGTL as an example. So I'm looking at it for it to break $1.04. So how much am I willing to lose, and what is the profit target that I'm also willing to take home? You always want to have a profit target that is bigger than your loss rate. Anytime a stock break $1, if I'm gonna use the candlestick, this my loss will gonna be this green, under this green right here, which is 92 cents. Okay, so it's gonna be under here 92 cents. If you set it so close, it can just strike you out and then still move. So you want to give it a little bit of room, because stocks that break $1 in that sense is for the most part to go back to break 115, 120. So if I buy this stock at $1 and I'm willing to lose 80, I'm willing to lose 8 cents. If my profit target is 125, is double the amount that I'm willing to lose. So you always want to put in mind that how much I'm willing to lose has to be smaller than what I will gain from it. But it's not just a random number that you put in your mind. No, you have to look at the candlesticks. You have to pay attention to the previous behavior of this stock, and then determine. But for the most part, if a stock come to $1, I'm not willing to lose more than 10 cents. Even if it steps you out multiple times, I will rather go in 3 times and lose 30 cents than in a single trade to just lose 30 cents in a single trade. Because there's no way you're gonna have a perfect information to enter into the stock. So for most of the information that we are using for our entry is not going to be like 100% accurate. So if we can do that, then we have that probability mindset. Then we also have to have in mind that if it doesn't go well for me, then what next? What am I willing to lose? So you always want to make sure you put a stop loss that is not way high, but it won't be just today for you to just know that, hey, when I buy this stock I have to put a stop loss here. But as time goes on, but because I have perfected with $1 a whole number, $2 a whole number, or $3, I'm always willing when it's $1 to lose 10 cents, or for the most part 15. I'm always willing to lose when it's $2.20, because it is easier for a $2 stock to go to 3, to go to 4, versus $1 coming to 2. Because most of these institutional traders are not going to put their money into these cheap stocks. When the price is 5, 10, 20 there, yes, they can put their money in. But when the price, you have a $1 stock, nobody is going to put $1 billion in. So that is how I gauge my entries and also my stop loss. If you look at the price, anytime these candlesticks are going up, you will see here, these are the price. You will see that the price is also going up. The only thing is when it's an hour, 2 hours, or 30 minutes, it lags. So if it is 1 minute candlestick, you will see how quick it's moving with the price versus when it's an hour. But I wanna, if I want to hold on to this stock as much as long as it does what I want, I will use the higher time frame, because I'm not just getting in right now and I said, oh, I always trade 1 hour, I trade 30 minutes. So if I get into the stock and it doesn't do what I want in the 30 minutes, that means I'm going to force it out. But there was a reason why you picked the stock, and you have already defined your stop loss and profit target clearly. So you just have to leave it for it to do whatever it will do. And then if it doesn't go for you, it steps you out. Or if it goes for you, now you make money. But if you just go in and then you have a time frame that you want to come out, the market doesn't work for you. It doesn't work the way you want it. So what are you gonna do? This is a penny stock, but if I have to be interested in this stock, it's gonna be after it breaks 44 cents, because that is the high of the day. And when it break that 44 cents, you will see how quick it just will move. But if it doesn't break it, you just let it be, because the stock started from here. People have already made money, and you don't want them to dump it on you. So if it says it's high, if it is so strong, you have to go ahead and break this high of the day. And this is just a 1 minute candlestick. So um you just have to have patience for it to break the high of the day. All right. If you're a beginner and you are using Weibo, it has certain features that are make it easy for you. And with that, you can, for instance, if I look at BURU, um, free market, I free market high was around 21. So now when the market opened, it just dropped. So you're waiting for it to come back to break it. But over here, with Weibo, it has other features that is cool. You can come in here and then indicate that this is uh, okay. I think you don't get that feature on here unless they download that version. But let's see if I can pull my other account. Other than that, you can come in here and then indicate that this is a resistance, and then you can put a text in here to show that this is also um, maybe a support at this level, which is cool. So now you're waiting and you are looking at it if you break the high of that day. If it doesn't break it, you don't lose anything. You just have to set it up. You can set it up and then just you don't have to sit and watch and put create an alert that if you reach there, let it send you an email. It will go ahead. If I log in right now, it will go ahead and send me an email to alert me that hey, the stock has reached here. If not to, you can just say, because at the end of the day you want to be a stock trader, so you want to watch the market and see what is the market is doing. And to me, I think there's no education than you sitting next to the market and constantly seeing how things change, how things stocks move so fast, 400%, 300%, and how it can drop in the reverse the same way, so paying attention with the market is one thing that you want to do all the time. Yes, Alan, this class has begun. I don't know if you can hear me, but if you can hear me, you can say yes, and then we go over what we are watching for today. Um, Eric been here for a while, and we were looking at stocks and also talking about how do you know that this stock is about to move. So I should get in, and I indicated that there are certain levels that are very respected in the market, and we call it psychological prices, like the whole numbers. If you have 1, 2, 3, 4, 5, all those whole numbers, 10, 20, 30, 100, is very much respected in the trading community, that it's hard for it to break, whether it's going up or break coming down. So for instance, as is now, I'm looking at this stock CGTL. It's almost close to 1. And I know very well that 1 is a whole number. When it break 1, many people are going to join in. For instance, we have also SWMR. This is a stock that started yesterday. It was like $11, and then it went up all the way to 34 about after the market closed. This morning before the market opened, it went to 57, and then when the market opened, it went to 64. So the high of the day is 64. Now it's just consolidating. It's coming down, up, down, up, down. You will not see that we have people above 64 with tons of money to buy, but the moment it breaks there, it's so quick that it will go 65, 66, 67 very quick. So those are very respected numbers, and like I was talking about whole numbers, 50 now the stock price is 58, we are getting close to 60. 60 is a whole number and it's respected. You will not see people physically having money standing there, but when it gets to 60, you will see how quick it will break and then rip it. So it's called, those are the breakout points. So we pay attention to those numbers for our entry. And how do we get out? We also pay attention the same way, look at the candlesticks, and then it determine when should we get out. Because for instance, if I'm getting into a stock at $60, I'm not gonna let it run and drop to 40 or 50. I have to make sure the candlesticks are right, and then I can, if I'm losing $5, I have the probability, high probability of making 10 or $15 on the stock. And if that doesn't happen, then it means I don't get in. We have something we call risk calculator that as time goes on, I'm gonna put it here, and then people can also download it. If you tell it how, when you want to enter into a trade, how much it will calculate and tell you how much share you have to buy, and also tell you the risks factor that is involved. Because if it is too high risk, they want you to buy less share, and if the risk is less, you can buy more. So as time goes on, we're going to also keep an eye on that. But as it stands now, I don't see anything that is more interesting. The only stock that I'm watching right now is CGTL, for it to break 1. The break of 1 is where the entry comes in. What's my profit target? I'm looking at 115, 120, and 125. Some of the platforms allow you to set multiple targets, because let's say you are thinking that the stock is going to go to 130, which is easy, it can go to 130. But what if it doesn't go to 130 and it went to 120? That means you set up the whole stocks into 130, and then you lost those profit. So you have 100 shares, right? You can set 20 to sell at 115, 40 to sell at 120, and extra 40 to sell at 130. So those strategies also help you to lock in profit. All right, now we have CGTR. It just tested one. Let's okay. It just tested one, but you see how quick it's moving. The candlestick is moving because one was a whole number and it's respected by traders. And if you are not being greedy and you want to get in quick and come out, setting it at 110, 115 is for the most part easy for it to get there because now is the time that other people are going to get in. People are going to also see it. But you see how quick it will move from 1 to 110 to 115. And if it doesn't go and it goes reverses against you, when we go back to an hour candlestick, you will see that 92 was the stop loss level. So if I was getting in with 1,000 shares, I'm expecting that if it doesn't go for me, I should sell me out at 8 cents. Now, if I have 1,000 shares and I want to sell it at 120, I'm going to make like $200 on it if it goes for me, which is very easy for you to get. But you always want to make sure you give it a room because it's not like sometimes it will just hit one and then it will rip through. Other times it will go to one, test it, and then draw back. Test it and draw back multiple times before it will take off. So if you set it, let's say you set it at 98 cents because you just want to lose 2 cents. Yes, you are being you are preserving your capital, but it won't give you the room for it. It will just sell you out. So you want to make sure you give it room for it to also maneuver through. So when it's break of $1, we're looking at 8 cents. It's not bad because if you start to move and people start to come in, this morning AIM got into the scanners when it was the same thing when it broke the dollar. Even got in and get out. It went from $1 all the way to 170, which depending on how much shares you have, you could have make a huge money. All right, so if you look at how quick it's going now, we got $1.06. If you were say having 1,000 shares, that right there is $60, and in a split second it can just move depending on how much shares you have. But you want to specialize in one area and also know the type of prices that work for you. For me, I like stocks that are breaking $1, 2, and 3 because it's more easier for me to trade. And like it won't break it just right there when you are looking at it, but you have to give it time. CGL, it took a time, but as I told you, if you look at it, you see how quick it's moving now. We got $1.09, it went to $1.10, now it's $1.12. So you could have this few time make up some money. And then if you look at the volume, it's also indicating right here because it was red with this single doji candle right here, but then it started changing, and then it changed, and from there you have more volume coming in. And this indicator that I have here is a trend indicator. It's also, you see that all the three are just moving together. So this is how you have pay attention, you have patience. You see how quick it just ripped through 18, 118, 120. It's so easy, and as it's gaining more percentage, everybody is watching it, and then now people are start to get in because it's becoming interesting, versus when it was around 1. Most traders don't know that it's gonna break 1 or not, so they were not interested. But you have to have patience and watch it. The only reason you want to set your buy order and sell order at the same time, you saw that if you have bought it and set it to 115 right now, you've already made your profit and you're gone. But if you are waiting for it to come to 120, it might come back and break 120. But what if it doesn't come back? Another stock that I was watching also is EVTV. It has a continuation news. The news is not fresh, not today, but it has come close and is coming to break a whole number. So now we're gonna have to watch to see if you break a whole number, and if you break 2, going to two, because this is uh higher than $1, going to 225, 230, that would be my profit target. And then two 190 or 189 will be my stop loss. But you have to have patience, wait for this stock to come back and break the high of the day, because look at it, it starts from here all the way. So if it doesn't come here to break, now it's tested it multiple times. If it doesn't come here to break and you just bought it here with anticipation, yeah, sometimes it will break. But then what if it doesn't break it, and then you got in and it start dropping on you, so paying attention to the whole numbers is very, very important, because everybody that is trading have respect for this psychological numbers. I've been watching PERF for almost since morning, and it's still here, and I'm still watching. But I think, as announced, CGTL is gonna be the stock for the moment. Now we're watching also EVTV2 for the break of $2. Break $2, rate test, and then that's where it becomes a possible entry. EVTV just broke 2, and that's the whole number. So from 2 you go to 202, and clearly you see that the market respect this whole numbers, and if it's okay to buy under for it to rip through so you make more money, but at the same time, why don't you have patience and wait? Because what if it doesn't break? But once it break the 2, it's easy for you to have your stop loss below it, so it's always important to be patient when you are trading, because the market doesn't work the way you want it. It just have its time, and sometimes some of the stock that you are expecting for it to even move will not do nothing. But once you already check the news, once you already check the float, and you put it on your watch list, all you have to do is to pay attention and watch it. And if you look at this stock, it's been in trend or all day long, consolidated couple of times, and then the high of the day was here, which I put the mark on there. But the only reason I wouldn't go and buy over there, because it's so close to the whole number, which is 2. So I wanted to break the 2, so that now going forward I know that it can make 220, 230, 215 and stuff. And so let's see if you hold 2, and that's it. If it doesn't hold 2 and you have a stop loss for 10 cents or 8 cents, you don't have much to lose. um if I indicate that I don't really pay attention too much of level 2 and stuff, I have my reason. As long as certain um things work right uh before the opening, indicators are not gonna do nothing. Is you still going to see how quick or fast the stocks will move, um even without looking at indicators. It helps you, but then you also have to understand that certain things you can use other stuff also to get into the stocks, because you can have a hidden seller, a hidden buyer, and all those things. You can't control those numbers, but at least you know that if the stock has the news, if the stock has the flow that will push it, and you have patience and it's close to whole numbers and stuff, you know that it will surely move. And greed is the other part that always kill everybody, because you always want to have, you always want to, because if you have 2,000, 3,000 shares with 10 cents, that is $300 in a few minutes. With 20 cents, $600 in a few minutes. So it depends on how much shares you have and then how long you wanna stay in. But I'm still watching SWMR. The high of the day was 64. So if it comes back to break 64, now buyers understand that it has momentum, it has strength. Now buyers will put money in. But if it doesn't, then you have that. So you just have to have patience and have, because stocks will not go up forever. Once it goes up, it will just consolidate and then come back again to try the high of the day. So you always want to have patience and have it work the way it work. And so I don't, if I'm home, if I'm not at work, I'm not gonna sit here and tell the stock that I want you to work in 10 minutes. If I don't make money, then that's it. No, people that win marathons are those who run all the way till the end. But in the morning when you start, it's like a marathon. You see how many people that are running, and you think that these are the ones that are gonna win. And the stocks are like that. In the morning, it will start the same way. Most of them, in fact, some of the stock that makes huge move, for the most part, will go down, sell, the way that people are even think it's not gonna go up until you just come back to see that the stocks is up 10, 20, 50%, you know. All right, guys. Thanks for participating, and also keep an eye. I'll post how EVTV and CGTL and also SWMR, how they all ends if they go back to break the high again. But I hope we meet tomorrow morning too. But thank you once again for joining me here. If today is your